Hello. Tembo Global Industries latest earnings are finally out. Let us check out the earnings. So, latest quarter was quarter 3 fiscal year 26. We will compare it to quarter 3 fiscal year 25. All the numbers are in crores. Revenue rose by 49.5% from 167.7 crores to 250.7 crores. However, EBITDA rose by 41.9%, which is still a very good growth rate, but very much lesser than revenue. So it rose from 30.5 crores to 43.2 crores. EBITDA margin declined from 18.2% to 17.2%. Then profit after tax rose by 36.7%, which is still a very good growth rate, but way lesser than revenue. It's lesser than EBITDA, the growth that is. It went from 19.1 crores to 26.1 crores for the latest quarter. Profit after tax margin slipped from 11.4 percentage points to 10.4%. But finally, EPS, earnings per share, only grew by 8.5%. So profit after tax rose by 36%, but earnings per share rose by only 8.5% because the company issued more and more shares. Okay, so the denominator of earnings per share increased a lot. They issued a lot of more shares, so that's the issue. Only 8.5% growth in earnings per share. Now, 9M fiscal year 26. So the first 9 months of the fiscal year, that is quarter one, quarter two, quarter three combined, you can see a longer term performance. So in the longer term, okay, 58.6% growth in total revenue from 469 crores, 469.3 crores to 744.2 crores. EBITDA rose by 64.7% from 62.8 crores to 103 crores. Profit after tax rose by 74.2% from 39 crores to 62 crores. Earnings per share again grew by 38.4% only. Still a very good growth rate, but again, the dilution. So it seemed like, overall speaking, the last 3 quarters combined, profit growth and EBITDA growth was very good, not the earnings per share one. But this quarter, the EBITDA and the profit one is still great. It's still great, but it's lower than revenue growth. Okay, margins kind of took a beat. Then the segments, different business segments of the company, how much did they contribute? So first we have the engineering segment, second we have textile segment. So engineering segment revenue rose by 52.9%. However, earnings before interest and taxes rose by only 28.9%. Revenue contribution was 129 crores by the engineering segment. 39.5 crores came from engineering in the form of EBIT. The EBIT margin declined rapidly from 36.1 percentage point to 30.4 percentage point. Then the textile segment contributed 121.2 crores, a 44% increase. However, EBIT rose by 262%. But you can see that first of all, that's a great growth rate. But you can see the margin, EBIT margin is only 0.9% compared to 30.4% of engineering. So it seems that both of the segments are now pretty equal in revenue. This segment, engineering, is contributing way more to EBIT, contributing way more to profits. It's more profitable. But this quarter, it seemed that very good growth rate for the EBIT, earnings before interest and taxes, for the textile segment. Then here we have this long paragraph. This is by the Managing Director of Tembo Global Industries, Mr. Sanjay G. Patel. He's expressed his view on the latest performance. So let's read the things in black. First, the company's revenue visibility strengthened with a robust order book of 1,484 crores. So the current orders the company has from customers, like the orders it actually has right now, is 1,484 crores as of December 2025, dominated by engineering and EPC projects. Additionally, Tembo is in active discussions with a large corporate group for potential projects in port construction and fuel farm systems, representing 700 crore plus opportunity pipeline across civil, MEP, and HVAC works. HVAC is heating, ventilation, and air conditioning. MEP is mechanical, electrical, and plumbing work. Okay, just like the supporting systems in like maybe ports or even like anything. Heating, ventilation important, plumbing is important in like buildings, so many things. So it's currently in talks And if these stocks materialize, it could lead to 700 crores of more orders for the company. But they are in talks. Then, operationally, this quarter marked a significant milestone with the commencement of commercial production at the new Vasai facility. They have a new Vasai facility. This plant will scale Tembo's installed capacity to 1 lakh metric tons from the earlier capacity of 18,000 metric tons. Massive capacity expansion for the engineering segment. I believe the Vasai facility is for the engineering segment. So going from 18 lakh metric tons to now 1 lakh metric tons with this new Vasai facility, with a peak revenue potential of 700 crores annually over the next few years. So, in the next few years, when this facility will be utilized, it will be utilized properly, effectively at its peak utilization, it can generate revenues of 700 crores annually. And Tembo in fiscal year 2025 made, I think, around 740, 750 crores ish. So, Vasai facility is going to be massive for the company considering its current size. And finally, in defense manufacturing, key regulatory milestones, including land allotment and arms license approvals, have been completed. So, for its new defense, what do you say, facility? Yes, defense segment. Regulatory milestones have been accomplished, like land allotment. So, it got the land and the arms license to sell arms, they have gotten. And yes, in the solar business, they're also making a solar plant. Land has been acquired across 24 sites, along with the first tranche of financing. So, land has been acquired, and the financing, the first, you can say, the stage of financing has been acquired. So, let us see how the profit margin does in the future. This quarter was a bit lower on the profit side, especially earnings per share. Yeah, this quarter's earnings per share was not good, but this quarter only, if we take a look at a longer term view, like a few more quarters, we can see there has been good growth in earnings per share also. Let us see how much more money the company is raising. And of course, when they're raising money through shares, it means they're not taking debt. If they take debt, there's interest component also. So there's pros and cons, not saying raising equity funding is bad in any way. Of course, the company will need money to expand and grow eventually in the future. Let us see how much more money, how much allotment, how much more issuing of new shares they do, and the future expansion and growth.